Hello, everyone. Thanks for joining us today. Joining me on the panel today, Ryan Rabaglia from Blockchain.com, Tanawat Chiewhawan from TokenUnlocks, and Keith Yo from Kaiko. Welcome again, everyone. And thanks for joining us at this panel discussion today. We're going to delve into the world of on-chain data analytics, a powerful tool that sheds light on what's happening beneath the surface of crypto transactions. Throughout this discussion, we'll explore how on-chain data analysis can help investors, how using these tools can help you identify strengths and limitations, and peek into the future of this technology. Perhaps first a round of introductions from our panelists, please.
Great, thanks, Timothy. Ryan Rabaglia, Global Head of Institutional Sales and Trading at Blockchain.com. Blockchain.com is the preeminent name in this space, led by our institutional trading desk, where we offer OTC spot, options, and market-making services.
Hi, I'm Tanawat, Chiewhawan, CEO founder of TokenUnlocks. We provide structured data on tokenomic data, whether it's be token allocation, token vesting, token supply, is to help investor understand risk and token allocation in the market and make information better.
My name is Keith Yo. I'm the Apex's director for Kaiko. Kaiko is a market data aggregator across 100 over centralized and decentralized venues. We also provide analytics and benchmark services and work with the likes of your Chicago Board Options Exchange, Bitstamp, Gemini, and a couple of regulators globally as well. Kaiko has been around for 10 years, and we are the only SOC 2 Type 2 certified digital asset market data provider, and we're regularly audited by a Big 4 audit firm every 6 months.
Great, thank you. So perhaps to start with a question for the floor, why does it matter? What can on-chain analytics tell us about the crypto market? And maybe you could, each of you guys can talk about, what you think are the key on-chain metrics that, that do provide these valuable insights. Ryan?
Right, maybe I'll jump in first because we're probably going to say very similar things. I always look at things through a trading lens and or investment lens, so you'll sort of get the sense over the next 30 minutes on this panel. But specifically from a metric standpoint, what we generally do look at, and again, these are all just like very common metrics, but it's deciphering, through the noise type of activity that we're really looking for. So it's transaction volumes, fees to the protocol level, seeing what accrues back into the protocol, and this is sort of a fundamental analysis aspect. I would say unique wallets, active wallets, fund of flows, all of these things that we sort of look at again from trading and or from an investment perspective is what we're generally looking at.
On my side, I think the on-chain can provide context in macro and micro. On the macro side, you can look at liquidity, stablecoin flow between chains. You can look at Bitcoin ETF, whether external funds gonna flow into the market or not. For TokenUnlocks, we focus more on the micro one. Micro one is meaning that liquidity per token, where it's allocated. And apart from the on-chain that traditionally people use for trading and investment, there's a on-chain opportunity to identify which allocations that projects gonna allocate to builders to. So seeing that on-chain reserve can help builders and innovators identify which chain to build, and also which chain is already have liquidity aiming to. So apart from like investment perspective, on-chain also give other context for different market participants, such as like innovators and builders too.
Just to add on to the panelists here, they cover most of the points. I think on-chain data also gives us the ability to look at things like, for example, what is the general market reaction to things like protocol upgrades. So in the recent Ethereum upgrade, you observe we've observed that volumes on some of the EVM chains like Optimism and Base actually increase. So that generally signals that the market is reacting positively towards the Ethereum protocol upgrade, perhaps because of things like lower gas fees and whatnot. And to Tanawat's point about the Bitcoin ETF inflows as well, we've also observed increased volumes, not just on centralized venues, but also in terms of the number of Bitcoins held on on-chain wallets, and that shouldn't come as a surprise to anyone. But interestingly, off the back of that we also made two other observations, one of which is that there's a widening gap between the share of Bitcoins being traded on weekdays versus weekends. And then the second observation is that the number of new Bitcoin on-chain wallet millionaires actually increases day on day. Is about 2,000 now, and unfortunately, I'm not one of those. But yeah.
Well, I know we're talking about on-chain data, but a lot of the insight that we can get also comes from incorporating off-chain data with what you have on-chain. So Tanawat, I want to ask you, how does incorporating off-chain data with on-chain analysis provide a more comprehensive view of the market? This is what TokenUnlocks does, right?
To give you more context about TokenUnlocks, so TokenUnlock is the promise of releasing tokens to particular parties of the market, whether it's going to be like communities, airdrops, investor, or node validators. And most of the early projects designed that in the off-chain area, the white paper, governance forum. And in practice, on-chain, when people hold the token vesting and unlocks up, they didn't need to be on smart contract. They can be like hot wallet, cold wallet, and they're distributed as they design. So the context that we can understand market better using off-chain, we can see on-chain design where they located and verify with off-chain governance. For example, Optimism might discuss about what to allocate the funds or the locks up to. Lockup might not be the selling pressure, but can be ecosystem development. And those off-chain can put a context more on like, okay, whether there going to be supply released to the market for inducing activity, which could be bullish or bearish. So adding more off-chain data to on-chain can sometimes give us different conclusions.
Ryan, I think you have some views on this from a OTC.
Yeah, before I thought you were going to move on, but yeah, just a brief one. Obviously, we run one of the largest OTC trading desks in this space, and with the so the advent of on-chain transactions and trading and people sort of moving on and off-chain when they see fit, whether it's driven by liquidity or whatnot. There is always some type of aspect of it where people could potentially be trying to obfuscate data and just trying to, sort of get people off their scent type of thing when you're really tracking like large wallets and whatnot. You see that a lot through like generating new wallet addresses also, which has been going around since Bitcoin was created. But when you really try and determine, using OTC data versus on-chain data, you will sort of see an interesting sort of dance that goes on, where people do try to shift off-chain, then back on. And again, this is generally for larger players and whales and whatnot, versus obviously retail, which is not really bothered by such, nor is anyone really tracking that type of information.
Moving on, I'm curious about how on-chain data analysis, on-chain data promotes trust and transparency in the DeFi ecosystem. So Keith, Kaiko provides a suite of tools for institutional crypto trading. Can you elaborate on how on-chain data fosters trust for institutions investing in the space?
Yeah, so I guess one of the core premise of blockchain, or the core principles of blockchain, is that it serves as an independent, immutable, transparent store of records that is basically resistant to tampering by any single party because of its distributed ledger nature of the blockchain. So therefore, for any DeFi protocols to work, firstly, you need protocol security, but secondly, you need to ensure that the data that you're getting or deriving from the DeFi protocol itself, it's It's trustable, it's reliable, and therefore allows users of the protocol to accurately gather information for them to make informed investments or trading decisions. So, for example, if you're interacting with a DeFi liquidity pool, you need to ensure that the data that you derive from the liquidity pool itself is trustable for you to make your next trading decision. The kind of data that you'll be looking at is things like, for example, your direct costs like gas fees, or something that's less direct. For example, the ability for you to monitor the slippage cost for executing a certain block size in the liquidity pool itself. And then adding on to that as well, it's also important to leverage on the transparency of on-chain data as well, because to a certain extent it gives you insights to the level of decentralization for a DeFi venue or DeFi protocol. What do I mean by decentralization is, for example, if you're looking at a liquidity pool, it's easy to look at the liquidity pool. Okay, it's not easy, but it is. The data is there for you to look at a liquidity pool to assess whether the concentration of the liquidity comes from just a few wallet holders, or is it truly decentralized. If it's the former, then it gives you an idea that it helps you to draw the conclusion that, hey, maybe I might want to reconsider interacting with this liquidity pool, because it seems like if the liquidity pool is less decentralized than I thought it is, any single party interacting with the liquidity pool can materially impact the prices of the assets that forms the liquidity pool. So yeah.
Thanks. Ryan, you deal with a lot of institutional traders as well. Do you see the same things?
Well, I think that the question is actually like just a general question too around like blockchains entirely, right? And that is exactly what what we're all here for. So I do think, increasing a level of transparency, all it's really doing is it's attempting to level the playing field, is what it's really doing. But I think from an institutional perspective, it's a bit different. If you sort of reflect upon how it works today in TradFi markets, it is not a level playing field versus, if you're talking about institutions versus everyone else. And that's well known. There's been many movie scripts and movies that have come out about that, and it still happens today. So I do think, through, on-chain analytics, that it does attempt to sort of raise the bar, let's say, of how we're actually supposed to look at data and use it.
Thanks. There are still several challenges in dealing with on-chain data and incorporating on-chain analytics into one's trading process. I guess several that come to mind: accuracy, accessibility, and interpreting the data itself. Question to all three of you: what are the biggest challenges in on-chain data analytics?
If I can go first, I think the single biggest challenge in terms of deriving data or contextualizing data for especially when the data comes from on-chain venues is that the data is pseudonymous, it's not structured. So for any layman to interact with the data that they derive from on-chain venues or on-chain protocols, it's going to be a mountain of a task. Separately as well, then you have the problems of interoperability, because with the exception of the EVM chains, most blockchains are not interoperable, which makes data accessibility between chains that much harder. And then that's why there are experts like TokenUnlocks, the likes of Lansen and Kaiko, we are here to kind of help the community to kind of unravel, demystify the complexities of interacting with on-chain data.
Tanawat?
I can add more on that. Thank you for mentioning TokenUnlocks. The challenge on-chain as by nature, crypto is freedom. So there's a lot of innovations coming on. Either you can innovate on top of other protocol, or you create your own tokens. And given like the trends of modular blockchain, it become easier to launch a token. And with that, people can innovate more. And by nature of it, there are less standardizations. People can call the same thing differently and call different thing the same. For example, the wallet labeling for the on-chain one one team might call it a team wallet, but another protocol might call it a company wallet. Another company might call it founder wallets. But the principle of it is quite the same. So I think the challenge of on-chain data is lays priorities on interpretations, how to structure those unstructured better. And you can see it become a challenging problem so that there are company to focus on different niche. For example, DeFi Llama is great at TVL. Nansen is great at wallets and transactions monitoring. And there's a lot of great tools out there that you can get good at only specific thing because the problems keep surfacing on the technical innovations that crypto brings to the table. So my take is interpretation is the most challenging one. Yeah.
Right. Yeah, I'll second that. So, you bring up a good point about Nansen and wallet labeling. But I still think there is difficulty in doing that. There's, again, I mentioned the word obfuscation. Like it's quite common, and it's people's right to do that. But sort of finding that signal through the noise, which is also a Nansen tagline. I think that's a general concept of what we're trying to do here and get around the current challenges. And it is trying to sort of, see the forest through the trees, as they say, to get to the root source and to actually enable like productivity.
All right, thank you, Ryan. Do any of you guys? What are the emerging tools or platforms that you guys are seeing that are revolutionizing this field, or pushing this segment forward? Are there any particular tools or platforms that you might have in mind?
Yeah, one is TokenUnlocks. Thanks. But I think there's each company have their own focus, as I said before it. One company can focus on, for example, L2 beat, great as evaluating L2s. Artemis good at L1 metrics, utilities. For us, like TokenUnlocks, we focus on more like token supply side. Where's the tokens, how much is it, and who is going to receive the token at what time. So we focus more on the supply side. I think there's a lot of great tools coming up, given because blockchain innovation every day is as I mentioned. But then when you want to understand the market overview and analytic of all the workflow that you need to understand, combining all those two can give you a great result. And I don't think it's gonna be a single platform can do everything great, but learn to use different tools is the critical ways of how to get to the market and understand on-chain data better. Yep.
Yeah, I'll probably leave it to the platform experts here to my left, but obviously you have like all of your news sources now that all interpret and integrate different types of on-chain analytics. Obviously, Kaiko and TokenUnlocks are at the top tier in there, and as I mentioned, Nansen before, and you even have like some original sort of call it news sources that are now starting to integrate on-chain analytics, such as a Misir and some others as well.
If I may add as well, I think it's also encouraging, very encouraging to see that many companies coming together to solve one problem. You don't see just one single company trying to address a single gap in the market. You always see a few or many companies coming together trying to solve the same problem. And the other thing, it's also encouraging to see more companies partnering up with other solution providers to address a wider problem. For example, Kaiko, we are primarily an API-driven market data provider. We partner with software providers like Nansen to give Nansen's users a better worldview in terms of what's happening, not just on the on-chain space, but also on the off-chain side of things. We also do partner with Misir, for example. Misir is great for their terminals or news terminals or software front end as well. So we are the data backbone behind that, but we are both trying to address the same problem. And of course, I think we're looking to work with other providers in this space, looking to try and tackle a bigger problem rather than just a particular smaller gap within the wider addressable market.
Thanks, Keith. So let's spend a few minutes talking about the potential of on-chain data in predicting market movements. Can on-chain data be used for predictive analysis, and what are its limitations? Maybe Tanawat, you can start with this.
For me, I think both on-chain and off-chain can be used to predict. On-chain help us understand the historical activity of user, whether it's going to be like a market participant for the protocol or higher understanding of market where the liquidity going to flow to which chain. So you can sort of predict what's going to happen next for each chain. Another part that I want to emphasize is that there is also insight on off-chain governance area that, for example, let's say like Ethereum gonna change emissions in like back then in proof of stake world. Those kind of signals happen in forum, happen in discussion, happen way before it's occurring on chain. So predicting the futures of market trend can be used both like the discussion-based policy that technical people are discussing to kind of predict what's gonna happen, and then on-chain can confirm it. Another on-chain part that can really help people understand is the smart contract itself. If it's designed for the futures release emissions, those can help us project the supply and demand side for the market better. So yes, I think there's always an angle for on-chain to combine with other contexts to predict the futures of the data. Yeah.
Thanks.
If I may add here as well, I think it's important to combine off-chain and on-chain data when anybody is making an investment decision. You need to be able to observe a broader range of markets to spot potential price dislocations, whether you're out there looking for an arbitrage opportunity or whether you're out there trying to identify a potential rug pull in the market. So just bringing back to the Luna Terra example, some of us might be around back then when this happened. The DPEG for Luna and Terra on the turf pool actually happened 2 days prior to the actual crash on centralized markets. So the gap, actually, the price gap between off and on-chain pricing actually existed for 2 days, a whole 2 days before the eventual collapse on centralized markets. So I think it's important for everyone, especially for tokens that have significant volumes on both on-chain and off-chain, to be able to analyze and look broadly at both types of venues and not just focus on any single one.
Ryan?
Yeah, just really briefly, I think my main concern with all this is probably just over-reliance of the data. And that's a common issue today with something like AI, and how, we are extremely reliant on it, and it may have seemed like it came really quick and fast, but everyone here uses it in some way, and it's reported 80% of humans will be using some form of AI daily within the next 3 to 5 years. But I would say this is like over-reliance of it, and even though I do enjoy the rewards that on-chain analysis does give us, again from a trading perspective and investment perspective, but relying too much on it and sort of being involved in the pitfalls of just sort of again not really having an original thought, and then believing intentional obfuscation and all those things, it could potentially lead to a negative impact.
Thank you. Tanawat, so token lockup events and vesting schedules are crucial for DeFi projects and their success. How can TokenUnlocks, your company, contribute to a more transparent and predictable DeFi landscape?
Yeah, thank you for the questions. I think as Keith said, working with different partners to demystifying the complexity of the data, that's one part. And there's a lot of challenging in this space, particular if we're talking about TokenUnlocks. When we have TokenUnlocks data, and the next one is the projection of supply data. I think most projects would love to focus on demand side, how good project it is, what's the narrative, what the utility of the projects. Another area that I think can help bring more transparency is standardizations of the token supply. whether it's going to be like token supply projections in the futures, or estimate that in the traditional world, understand those numbers more. So at TokenUnlocks, we try to make sure the data is structured so every project can be compared on the risk side, and hopefully people can understand the investment area on this crypto more, and be confident more to use the supply data to understand the risk. That's the area that we trying to focus on. Yeah.
Thank you. And Keith, with Kaiko's focus on institutional adoption, how do you see on-chain data analysis bridging the gap between traditional finance and the crypto market?
I think when it comes to institutional adoption, there's a certain degree of maturity in the institutional market over the past couple of years when it comes to the importance of being able to observe and interpret on-chain data. Because firstly, again, the on-chain data is tamper-proof. It serves as a proof of truth. It serves as a source of truth for what you're observing off-chain as well. So, for example, looking at liquidity off-chain, is that real liquidity? Do I need to look at what's happening on-chain for some of the tokens that have a significant supply on-chain as well? And separately, not just within the institutional client space, but also on the regulator side as well. Regulators are trying to educate themselves at a really, really fast pace. And this is, again, from my observations working with most of the US regulators and European regulators. Most of them have an understanding that they need to also be surveilling and monitoring potential instances of market abuse or market misbehaviors on chain, and interrogate the data on chain to identify and isolate these bad actors and go after them. So yeah.
Thanks, Keith. Ryan, with the proliferation of on-chain data tools and platforms that investors can use, how do you see this playing a role in the next wave of crypto adoption, particularly in regards to your investor or user base?
I'll probably would take a look at some of the things that have actually occurred in the past and what we've used and many others have used to determine, strategy and whatnot. There's so many different metrics to follow, and I know that we sort of kicked off the panel by stating a few of them, but I think it's probably easier just to go into examples of how things have actually worked in the past. So, stablecoin issuance, minting, redemption schedules, whether they're increasing or decreasing, it obviously can give some type of indication of what's actually about to occur in the market, or it could potentially be what has already occurred. And that's up for you to actually determine. I would say unique and active addresses that we've seen come online. This has had direct exposure and direct impact on what we've seen before. We've seen it in the 2017 bull run, where I think we saw like a 5x of BTC and ETH active addresses through the tail end of, or the midpoint of 2017 into the end, and then obviously then we saw the sell-off in the beginning of 18. We also saw it again into DeFi summer, also where we started to see massive TVL buildups, and whether you can question whether this was too late or not to get involved. Generally, in the case of DeFi summer, it was not too late, but there was a point where it was too late, and plenty of people did get burned. So I think there's something to be said about using this data, but then also doing your own data analysis in the background as well. So we have all these great platforms, but I believe, from a trading and investment management perspective, that we need to also do our own work, because again, there could potentially be a lot of noise, and I do think as time goes on, as more users added to the ecosystem, the pie is going to grow. There's going to be more noise. Granted, then the tools will get better and sharper, so we're going to always have this back and forth battle of what's actually applicable and what's usable.
Great, thank you. I think I've time for one last question for the floor. For members of our audience who are interested in incorporating on-chain data analytics into their arsenal of tools, what would your advice be? How can they get started?
I think there's good resources out there already. Whether you, I think, should pick the thing that you most comfortable first. For example, you don't need to be a coder to analyze data. There's a great platform with no code using visualizations. That's a good start. But if you can go deeper on like query or on-chain data, query off-chain data, and mingle with it and analyze it, it's there are a lot of great free content. Even crypto tools that free to use, there's plenty of them. Like Duna, I think is always free, right? And then there's other great platform that you can start. So I think pick the one that the entry point is easiest, and then go from there and down the rabbit hole. Yeah.
If I may add on to that, I won't take much of time. I think we just ran over. I think adding on to just focusing on the easiest point of entry, you should also dissect the problems as well. Which area of on-chain data do you want to focus to build up your investment thesis? Do you want to look at price actions, and then that's when you dive down the market data rabbit hole? If you want to focus on tokenomics, and then that's where you look at the stuff that TokenUnlocks do. If you want to observe user behavior or interactive, how on-chain users interact with a protocol, then that's where you use software providers like Nansen to help you to perform that kind of analysis. So yeah.
Yeah, I would say, again, it just depends on what you're actually trying to use it for. And if it's trading, investing, then yeah, there's plenty of great platforms out there. But again, it's about interpretation, like my panel mates have said. But ultimately, I would just give a shout out to Kaiko, TokenUnlocks, and Nansen, which I use myself.
Super. And that's all the time we have. I'd like to thank our esteemed panelists for sharing their expertise with us this afternoon. Please join me in giving them a round of applause.